Joining us for a closer look at what's playing itself out in that market scene is Roy Mutooni from Sanlam Investments. Roy, a pleasure. Good afternoon.
Good afternoon. Thanks for having me.
All right, Roy, not the best day on the markets. There's actually lots happening on the company news front, both here at home, I think, as well as globally. But markets seem to be digesting that a little bit more pessimistically than I thought.
Yeah, no, so if you look at the top 40 is basically flat. The all shares also flat. The stocks at the top are the platinum stocks, the platinum group metal stocks, because there's been an uptick in platinum prices and in palladium prices as well. So that's at least positive. But yeah, it's a relatively quiet day. I think the biggest news is around inflation. If I look internationally, earnings are coming through. They're not spectacular. So yeah, I think the market is getting a sense of foreboding.
I mean, maybe starting off in the US, I think we've got Tesla and Alphabet that are out there already. I think Tesla, for me, continues to be a bit of a concern. It sounds like we're promising a lot and not quite delivering there. And also Alphabet, I think that's done really well, showing that there's more upside. Roy, I'm keen to get your thoughts on how you've taken stock of those stocks.
So Tesla came out with its numbers, and basically they're saying their gross margins compressed and their guidance for volumes were down. And this is sequential. So they've been downgrading their guidance over the past few reporting periods, and that's why that share price has sold off. So Elon Musk seems to be betting the company on this robo-taxi concept, but he didn't speak much of it. And that's why I think the doubts are now flaring up. It's clear there's no real solution to the volume issue or to the gross margin issue. And if robo-taxis is where they're going, you'd have expected him to be a bit more animated and speaking about it, but that didn't quite happen. And I guess that's why the market sold that one off.
And with Alphabet, what do you make of that one? That seemed to be better than expected.
Yeah, absolutely. They were ahead on all of their metrics. There's a little bit of a concern of capex being ahead of expectations and a bit weaker in YouTube terms. But I think it's just that it's rallied so much that people took an opportunity to take a little bit of profits. That one doesn't look like it has any holes in it. The AI theme continues to permeate through all of the earnings and all of the discussions, particularly in search, and then being able to incorporate it there. So yeah, probably still some more upside there.
Also interesting, I think, that you are seeing Alphabet in the red today. Like you're saying, so maybe some profit taking there, Roy. But it also does tell me is the fact that maybe investors are starting to be a little bit more level-headed about the AI story. It's a real story. Of course, it holds. We're not wondering about that anymore. But some of the rallies we've seen, I think, have been quite interesting.
So it's a combination of a number of factors. First of all, there was no other growth story. So when AI came out, that was the one thing that you could hang your hat on, particularly on these big platforms, which seemed to have a lot less risk and a lot more growth, particularly when interest rates were low. And even when interest rates rose, they continued to generate a lot of earnings growth because they had a lot of cash on their balance sheets and their network businesses. So they continued to expand without investing too much. I think what you're seeing now is a bit of a rotation away from these into a broader growth story. Now, it's not very definite. It's not very clear. The thought was that if interest rates come down and growth continues, even on a softer level, then we're into a new cycle, which promotes all of these manufacturing companies and alternative companies from the platform ones. But you're seeing the statistics actually slow down quite considerably, and that interest rate cut just isn't coming. It's not as imminent as it should be. So there's a bit of a concern here that you might be in a situation where they take too long and the slowdown comes quite fast, and then suddenly we're facing up to a recession rather than just softer growth. And that's a real concern, and that, I think, is what's being reflected in this volatility.
Very interesting indeed, Roy. Also keen to get your thoughts on Deutsche Bank out in Europe. That was also quite a down of a performance. I'm wondering, if that's also part of the reason that we are seeing European markets down today. How much of Deutsche Bank does reflect, what is happening in Europe as an economy?
Well, it's quite a strange one. So both Deutsche Bank and LVMH came out softer, But when you look at the ECB actually hopes it it believes they're in a position to cut interest rates. So I guess that's a reflection of the broader, weaker environment across all of that region, and takes us back to the original problem that the only real engine of growth here is the U.S. That's the only one that's growing in the high single digits. Everybody else is still struggling, and I think you see it in earnings such as these.
Bring it back home today. We saw, I think, Vodacom out with an update. Keen to get your thoughts on that one. It looks like Egypt also, the place to be for the company right now. I'm wondering also, Roy, is it possible that for some of our telcos, SA could be ex-growth?
So that's the big question. So first of all, starting with Vodacom, and I think there's a bit of good news for the Bears and the Bulls as well. So from the Bulls' perspective, Egypt is fantastic. I mean, growing 43% in a quarter and growing your customer base as well is fantastic. The only problem was when you translate it into rands, it actually was down 7.5%, but that was because of the big devaluation of the EGP that we saw already. The South African numbers, not as impressive. I mean, even the Africa business was growing in high single digits. South Africa, in terms of service revenue, was up just under 2%, which is a little disappointing. But I think the devil's in the detail. They took the opportunity to get rid of some of the lower ARPU prepaid customers, and they raised prices for the contract guys while offering more data. You'll only see the net benefit of that in subsequent periods. So I think it's early to call it ex-growth, but clearly it's a really competitive environment around both data and voice, and you've got some really strong competitors fighting for this pie. Remember, there's multi-SIMming. Most people who are going to have a cell phone already have one. So it's all about offering value, and the consumer is struggling. So it's a difficult market, whichever way you look at it.
And speaking about, competitors here, MTN says they're going to invest in satellites. Very interesting here, I guess. It's trying to gain competitive advantage. It also does scream CapEx to me, quite a lot of CapEx here. I'm wondering how markets receive those news.
So that's the thing about telcos. Telcos are about capex. And I mean, like Vodacom's capex intensity this time was somewhere in the region of about 15%. Telcom guides it to be somewhere around 12, in all likelihood to be higher. MTN is just as high. So that's the thing about them. They have to spend to grow. That's why at certain points in the cycle, they're unattractive businesses to hold. But as we see it right now, this is the only way. They need to expand. They need to expand their coverage, make sure they're reaching every marginal user, and then grow their ex-GSM business. So like Vodacom talked about, that 20% of their total business is now ex-GSM. It's fintech and all of those capital light businesses. That's what all of these guys need to do to prevent people from always saying that they need more and more capex, which means you value them less and less.
All right, I want to get into your stock pick in a bit, but first, maybe let's reflect on counters that have found favor with your industry peers.
I'm going to keep it local and go with Robex. So obviously it's a construction company focused mainly on roads, but they do have other stuff in there. I think with the recent new government, there's potential now for stabilization in government policy. Obviously, Sanlam is a meaningful client for them, so they do get tenders out of there. So I think there's been a big focus out of Sanlam to obviously refocus on fixing our roads. And I think Robex stands in good stead.
Also local, also in the same industry, WBHO. I think they've got a good book. They've got some good flagship projects. They are diversified, especially into the renewable energy sector. So I think going forward, they've also been proven to be a great operator. So I think they're going to do well going forward.
My stock pick is McDonald's on the New York Stock Exchange. So, as you know, the cost of living for everyone around the world has been going up, and people have been struggling. And Americans who received a lot of cash from the government during COVID have been spending that cash and are now running out of cash. So even the cost of a McDonald's burger has risen tremendously in the US, ranging anywhere between $9 and $18, which is way beyond most people's affordability. So what McDonald's have done now, they trialed for 4 weeks a $5 value meal, which gives you a burger plus 4 pieces of chicken nuggets plus small crisp and a small cold drink, Coke. The Coca-Cola is actually subsidizing this. And that has been so successful that the company is going to continue to roll that out.
All right, Roy, keen to get your thoughts on some of those. We've got Raubex, WBHO, as well as McDonald's.
Yeah, so Raubex and WBHO, definitely, those are stocks that have done well so far. And I think it's investors positioning themselves ahead of what the government of national unity is talking about with regards to investment in construction. Remember, there's been a huge purge in that industry over the past 10, 15 years, actually since the World Cup. And previously, you had up to about 5 big civil engineering contractors. We're probably down to 2 or 3, and these 2 would be the ones that most people are quite familiar with. They've both got solid order books. They've both got a solid track record of execution. So yeah, I think they offer some upside possibilities over the medium term, especially if the promise of infrastructure investment does come through. McDonald's isn't one that I've followed particularly closely. I just think that all of these staples have been sold off quite significantly in recent times because of inflation and difficulties around consumer. It'll be interesting to see what happens when interest rates start coming down, and maybe consumer spending power starts to recover.
With that said, Roy, which counter are you loving this afternoon?
So I'm picking a local one, and that's Motus. So I think Motus has struggled a little in the past couple of years because of the acquisitions it's made, which brought on a lot of debt during a time when people weren't buying cars. But we're in a position now where their cash generation has grown. They're going to pay down their debt over the next 6 to 12 months, see the benefit of those international acquisitions, and then domestically, if interest rates do come down, demand for new vehicles should recover. Even if it doesn't recover to historic levels, I think this is a business that is well positioned to benefit from such demand. So I think even at current levels, you still have some significant upside to come.
Well, Roy, an absolute pleasure having you with us today. Thank you so much for your time and insights. That was your Midday Markets Update with Sanlam's Roy Mutooni.